please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata. With me are Anuj and Sonia. So we are back to square one, back with the entire gang. Well, guys, for me, before I speak about markets, deeply sorry that Indra Nui has stepped down, but it's really a moment of glory. The way she went from strength to strength, minority in gender, minority in race, minority every which way, and making it to the top. So just a word of praise, gratitude to someone who has made it so big, was a trailblazer for all women who wanted to work. Well, that said, on the markets, I think nothing really much to add on the markets. Life is exactly what it was 24 hours ago. Wall Street and Asia with a spot of green. There's really nothing to bother, except that the entire bunch of results that came yesterday evening after the markets closed were all, you know, not really much to write home about. Not that much. People expected much from them. I mean, Adani Ports, Adani Power, Dixon Technologies, Syndicate Bank, Dhanalakshmi Bank. Ujjivan was a bit of a shock for me. I thought they would do better than they did. Max Financial. Either they were pedestrian or they were downright bad. So, I mean, I know that these are not the ones that make the mood of the market, but just a point on the table. The other big development after market closed from a cost of capital point of view is HDFC Bank raising its deposit rates by 60 basis points, depending on which tenor you look at. Some are 60, some are 40. But, you know, this is the savviest bank. If they think deposits are going to be expensive by 50 or 60 basis points, then you can be very sure the cost of capital is up by. They're going to pass it on. I mean, they're not going to take it on their profit. So lending rates will also follow. And then, you know, that means for the industry, for the country, cost of capital is up by half a percentage point. Yeah. And that's not small.
Okay, but we've seen that play out as well, right? I mean, in the
each
past,
passing day, it becomes worse.
Yeah, so I guess that incremental impact is what we're going to see in the industry. Take your point, Lata, morning, Anuj, morning. We've also seen this market become so broad-based in terms of buying, right? I mean, yesterday, the Nifty hit another new high, but we've seen more participants come in, more banks, Axis Bank, ICICI Bank contributed to the gains yesterday. And the, you know, the flows picture has improved quite a bit. Both DIIs and FIs continue to buy. Anuj, morning. Well, welcome back from my side because I wasn't there yesterday. I mean, you know, it's been different, right, since the last time we chatted. I mean, the last time we chatted, the complaint was that there is no broad-based buying, there's no participation. But how things have turned in 15, 20 days?
Oh, yes, Sonia, morning and welcome back from my side. You were not there yesterday. So, look, you know, all through closing bell, we were making this point yesterday. And this is remarkable. Just look at Bank Nifty yesterday. You have Kotak Mahindra Bank, HDFC Bank and IndusInd Bank. Yesterday, these three stocks were down. In fact, Kotak and HDFC put together are 52% of the Bank Nifty. And you add IndusInd, that's almost about, say, 60%. 60% of the Bank Nifty was underperforming. But you didn't see massive selling over there. But look at the buying component and the corporate-facing banks. You had ICICI Bank, which contributed 143 points to the Bank Nifty, had delivery volume of 400 crores. Axis Bank had delivery volume of 450 crores, that contributed 84 points. And SBI contributed 76 points to the Bank Nifty, and you have delivery buying of 275 crores. So the leaders not participated, still the market went up. Also, what is interesting is all through this year we were complaining it's a set of 6 stocks which was taking the market higher. Yesterday at new high, let's take a look at where these stocks are. HDFC Bank is 5% off its highs, Kotak is 9.5% off its highs, HDFC is 3.5% off its highs, Bajaj Finance is 3.5% off its highs. The leadership group is well off its highs and the market is at high point. So I think that the point that we were making, either the mid caps also participate, or the others also participate, or the market itself goes down. I think the bulls would be happy that it's the part where others have contributed. So mid caps are participating. The only vulnerability right now for me is complacence. If you take a look at what's happening in terms of the market breadth, of course, has been strong, but put call ratio, the kind of put writing yesterday, massive put writing at 11,400, even though we haven't yet convincingly crossed that mark. That is the only worry, but that worry would be haunting you if there's some trigger. Right now, there's no trigger, but good time to perhaps get some risk management back on table if you're participating in the broader market. As we discussed yesterday as well, I think the Nifty junior stocks, that's the area that, you need to focus on. Good quality stocks which corrected because the market corrected, and they are bouncing back quite sharply.
Oh, absolutely. I mean, that's exactly why I put those earnings on the table. That, there are these spots of vulnerabilities. Many stocks have performed in terms of earnings, but many have not. And even those that have performed are doing so because of a terrible base. We have to just keep that in mind, though, of course, the going is great for the bulls.
Well, since you're talking about earnings, one earnings that you'd want to look forward to today is M&M. That's because, if you remember last week, IMD had raised its forecast for the month of August for the rainfall. And the view is on the street is that M&M will raise its full year guidance for tractor growth. And if that comes through, I mean, we've seen all the rural focused stocks rally quite a bit, Escorts, M&M, etc. So just keep one of these stocks on your radar today. In fact, it's a big day for the auto space. M&M, TVS, Motherson Sumi all come out with their numbers today.
No, when you said one stock that will be on your radar, I thought you may even say Punjab National Bank. I guess going by my inclination, that's what comes to the mind. That will be bad numbers. Though, of course, even if they are able to show relief, that fresh slippages
have reduced.
Yeah, last time was a disaster because they had to take into account that 13,000 crore fraud. This time they only have to provide for that. So that's why there will be a loss. But if they say fresh slippages are 4,000 crores, anything below 5,000 crores, even that will be very good news. And it's the corporate banks that are doing well.
Okay, well, on that note, let's kickstart the show and tell you what our wise experts have to say as we head into trade this morning. Anish Damania of IDFC Securities says the Q1 FY19 earnings so far have progressed well on the back of low base and demand recovery. He says while financials so far reported weak results led by aging of provisions, he has observed a recovery in consumption demand. He says IDFC Securities maintains their FY19 Nifty target at 11,550 to 11,980. He also says their large cap picks include Maruti Suzuki, Coal India, NTPC, IndusInd Bank, GAIL, Hero MotoCorp, Dabur and Aurobindo Pharma. And their small and mid cap picks include BEL, AI Engineering and Indian Energy Exchange.
Okay, that's a bunch to work with. Let's get your money market views. Absolutely placid there. Bhaskar Panda of HDFC Bank says, despite US-China tit-for-tat trade spat and absence of major market-moving data, the dollar index and crude prices have remained more or less stable and range-bound. He expects USD iron pair to trade in a range of 68.75 to 68.95 for the day. Could be a spot of bother over here because with each passing day, the Chinese yuan is depreciating and the US dollar is at 95 plus. So at some point, there could be trouble for the rupee, which will be welcome trouble according to me.
Okay, so welcome trouble for the rupee, but let's talk about the bond markets, right? Bhaskar Panda says Indian bond markets have been trading in a range and will continue to do so. He expects the 10-year benchmark bond yield to remain within the 7.75 to 7.78% range for the trading day.
Okay, over to Nigel then for the world view.
Well, the Qs overnight were positive. All the three frontline indices from the US markets, they ended with gains. The Nasdaq was a relative outperformer. Remember, that's one is on a 5-session winning streak. That's the best that we have seen since May. For the Dow, well, you had Disney that did well. That was the biggest gain on the Dow. While for the Nasdaq, Facebook was up nearly around 4.5% odd. And the result season on the whole has been good. Berkshire Hathaway came out with numbers. That stock ended higher. We had Thyssen Foods as well that did well. And another smaller company, Jacobs Engineering. All those three stocks did well. So result season was good. The trade war fears continue. Yesterday we had some commentary that's coming in from the White House. They're not ruling tariffs on the auto sector in Canada. So that's something that you need to look at as well and keep an eye out on. European markets ended more or less flattish with a bit of a negative bias. The FTSE, though, was a relative outperformer. HSBC came out with a set of numbers, looked good, but the stock did see some profit booking. The emerging markets as well, if you look at them, they ended with a cut of around 0.5% odd in yesterday's trade. Asian markets, they're a mixed bag this morning. The Shanghai market has come off the high point of the day. But if you're looking at the dollar index, well, that's holding steady at around 95.3 odd. Remember, the one-year high is at around 95.6, so keep an eye on that mark. While Brent crude prices slipped a tad bit overnight, currently holding towards that $74 per barrel. SGX Nifty is indicating a flattish start. Back to you all.
Okay, thank you very much for that wrap, Mangalam. Well, I've always worried that exports have not picked up, although our destination countries, the Gulf countries, have improved. The other big worry has been that because exports have not picked up, but crude prices are higher, our current account deficit is, widening. And an answer for that is to allow the rupee to depreciate. I'm glad to say that I'm not the only one worrying about this. The big worry that came on this issue was from Dr. Kaushik Basu. He says that the right value for the rupee should be something like 71, 72, and that will give enough breathing space both for imports and exports and for a stronger economy. Listen.
I do feel that also the informal sector, the small producers, they have not done well in India. Even getting loans to them, the small producers, easier loans, the banking situation has been difficult. This is, of course, build-up of a problem over a long time. So that is affecting the smaller players' credit availability, and those things play a role. So that's there. Along with that, I do believe that the exchange rate is playing a role. And I should make it clear, I don't now work in government, I don't look at the last moment data, but my hunch is that the rupee has got stronger in real terms. There's been some correction over the last few months, we know that, but not enough of a correction. And the strengthening of the rupee means that exports are being hurt globally. This is my own back of the envelope calculation, I would expect something like 70, 71 rupees to the dollar to be where it should rest, which is going to give the space for our producers to get in competitively in the world market. That has not happened. Fortunately, actually, India today has the foreign exchange space with $405 billion. We can buy and sell dollars. We can build up the reserves a little bit more. A small economy like Hong Kong has more reserves than India. Taiwan has $450 billion reserves.
You want an enforced depreciation.
So I would think that a planned intervention, which is a correction, it's not a depreciation really, it's a correction for the fact that there has been real appreciation over several years. That correction should be done in a very managed way instead of having the market run away and do that. So that would be my recommendation. If I was sitting in government, I would have sat with policymakers and said that make that small correction. That's a boost that our manufacturing sector, the export sector needs.
Okay. Well, there are 2 or 3 questions I want to ask you on this. There appears to be a belief in government that actually a strong currency is a sign of a strong economy. Obviously, I've not tested this with actual sources, but there are people who tell me that the government doesn't want to see 70 to the dollar before elections because that's scary. That looks like India is weak.
Yeah.
Do you think this is ill-informed advice?
Yes, I would think so if that is the view, because, the world over, countries are fighting to get weaker currencies. From United States through China to Switzerland, they want that because of the export market. So trying to sort of symbolically hold it higher does not really make sense. So yes, if that's the spirit in which it's being done, I don't think that is quite correct. But of course, you need to educate the people, because if people are miseducated on this, that becomes a natural tendency.
Okay, we will get to more of that very interesting conversation and some unconventional and views that have come out of long experience. But before we take our first break, here's some thoughts from the outgoing PepsiCo chief, Indra Nooyi, an icon for all Indians, especially for Indian women.
If you talk to the average executive in PepsiCo, they might even refer to me as Dragon Lady. You've got to rally the troops so that they buy into your direction, which is an enormous task. Bring the heart into the workplace, because if you don't, you cannot get the loyalty of your employees. My executives who report to me, I know everything about their life. You've got to bond the talent, not just buy the talent.
Welcome back to Bazaar Morning Call. This morning looks like we're going to head off to a good start. The SGX Nifty is in the green. Most of the markets, the Asian markets that is, are up and about. But you know what? We've been moving on our own steam. We've had buying from DIIs and FIIs. So let's see how things progress this morning. Our entire team is here to give you the list of top 10 stocks to look at as we head into trade today. Here they are, bright and early. Anuj, what are you looking at now?
So, Sonia, I've been watching out for stocks in the broader market, non-index large caps for last few days now. And I see housing finance, even though I take Lata's point on this rate hike and whether there would be an impact on NBFCs, I'm purely going by the technicals and the big buying yesterday. 1.5 times jump in delivery volumes, and the stock has bounced from 200-day moving average and is still 20% off its 52-week high. So in that sense, perhaps risk reward is in your favor. United Breweries is the other one. Actually, I wanted to take that stock yesterday, but I thought it was Monday yesterday, so But the stock was still up.
So you have to be sober.
It's in strong hands and this consistent buying. And yesterday also there was 2.3 times jump in delivery volume. So let's see if there's any follow through here.
Okay, thank God we didn't wait till Friday. Okay, no, I don't want to make much of this HDFC Bank issue. I already explained to you that across the board, from 6 months to 5 years, I can rattle off all those term deposits have been raised from between 40 basis points and 50 basis points, and at the highest level, 10 basis points. It's not something that's going to immediately affect all the NBFC stocks. But, if you take those that have a little more difficulty in raising money than the others, see, Bajaj Finance, Bajaj Finserv will never be affected. But if you take, say, Canfin Homes, MMFSL, DHFL, many of these, in good times, can raise money at 7% and 7.5%. In tough times, it will become 10%. And HDFC Bank is blowing the whistle and saying that the cost of money has risen. So I would, for the slightly more tougher NBFCs, it's going to be tough.
Okay. Well, post markets, there was a bit of a disaster from Syndicate Bank, and Ujjivan also came out with numbers. Abhishek?
Well, Anuj, as you mentioned, it is a disaster of a result because the NII declines 5% on a YOY basis, and this is for the first time in last 6 quarters or first time since Q3 FY17. The gross NPA has risen in absolute value by 2.3%, but the loan book has declined sharply by 7% quarter on quarter. Therefore, the ratio has increased to 12.6 versus 11.5 quarter on quarter. They have reported a net loss of 1,282 crores versus BNK estimate of a loss of 143 crores. Ujjivan, a weak start to FY19 as the customer have declined 0.5% quarter on quarter, and this is the highest decline unlike peers who have been growing their customer base. Portfolio as risk has come down, and the NII and PAT are below pole. Back to you.
Okay, thanks a lot for that. So weak quarter coming in from Ujjivan, but Sun Pharma is on our radar. Ekta tells us that the company has launched a hypertension, heart failure, angina drug. Looking at it, reading about it is giving me a little bit of hypertension. But Ekta, tell us it's positive news flow for Sun Pharma.
Yes, absolutely. In fact, it adds to its specialty pipeline because this form of the drug is actually exclusive to Sun Pharma. The drug is used to treat hypertension, but what you can do is just basically sprinkle it on your soft food, and it basically helps people who have difficulty swallowing, etc. So that's around 40% of the people, who are eventually diagnosed with it later in life. So this is actually quite a novel product from Sun Pharma, adds to their specialty pipeline. Morgan Stanley says that eventually they could probably make $40 to $50 million or $60 million from the particular drug. So it might not be a blockbuster drug, but the fact is that it's adding to the company's specialty pipeline, which is differentiating it from the rest, and hence you can probably expect some green on the stock.
Okay, thanks for that. Green on the stock, however difficult to swallow. Nigel, what about Hindalco? The Alaris numbers will be positive or negative?
Well, the numbers were very good, actually, Lata. Alaris's numbers, the quarter two current calendar year 2018 numbers came out and they looked good. Remember, when this acquisition was done by Hindalco, Mr. Birla was guiding for around $360 million in terms of an EBITDA number. Now, going by these quarter two numbers, it looks like it's achievable. I'll tell you why, because the EBITDA for the past quarter was $85 million, which is much better than the $55-65 million that they have been reporting out there. So that looks good. Even in terms of an EBITDA per ton, it came at around $360 per ton. That's a sharp improvement from around $300 per ton. So the numbers get a thumbs up. The US operations are ramping up well, and more importantly, quarter three as well is looking promising. So justifying that Alaris buy should take Hindalco higher in today's trading session.
Okay, I should take Hindalco higher. Thanks, Nigel. Anisha, what about Adani Group stocks?
Well, Adani ports to begin with, Anuj, and the performance is in line with expectation. Yes, the reported numbers look a tad bit weak because the SEC income is not there this time, and there is a forex loss of around 380 crores impacting the bottom line. But if you strip that off, the revenue on a like-to-like basis is up around 16%. The margins have come in at 66%. The cargo volume growth of around 9% is also in line with expectations. In fact, a tad bit better. The management management has maintained guidance when it comes to the FY19 volumes, margins, capex, etc. So on track to meet the guidance is what they say. Morgan Stanley, for example, maintains the 08 call, says the adjusted PAT is in line. However, they believe that the container volumes at Mundra Port might not sustain in the coming 2 years. Macquarie says that the logistics business decline of 23% and Dhamra Port decline of 16% is a tad bit of negative, but they maintain the neutral call on the stock. Back to you.
Okay, maintain the neutral call on the stock, but let's talk about some more numbers now. Parag Milk, Mangalam, how did that one look?
Well, very strong numbers, Sonia, you know, because the revenue grew by about 33% and on the back of lower procurement prices as well as a higher share of value-added products, the EBITDA, that one more than doubled, 109% growth out there. And as a result of that, the margins moved upwards of that 10% mark, 10.8%, and the net profit also fortified to about 2.7 times, close to around 28 crores. This compares with 10 crores. The management says they will continue to achieve higher market share and higher penetration through these new products that they launch and the increased distribution.
Okay, thanks a lot for that. Anisha, back to you. We didn't do Adani Power.
Well, yes, the Adani Power losses expanded and came in at 820 crores, but still the loss expansion is not as wide as we expected. So if you can take heart from that, that will be a positive. The revenue were down, and even if the PLF came at 38% versus 63% last year, but that was partly expected given Mundra was not operational, as well as the domestic coal unavailability led to lower PLS at Tiroda and Kawai. Now, in terms of the management commentary, they say that they're hopeful of finding a lasting and sustainable solution for Mundra, given the high-powered committee that has been formed, and they're looking to improve PLS because now they have got the coal also sorted for Tiroda and Kawai. For today, maybe a tad bit of green one on this.
Okay, thanks a lot for that. Mangalam, actually coming back to you, you spoke about how Parag Milk's numbers are very good, but you know, you have one more stock in the same industry on the other end of the spectrum, which is quality.
Absolutely. You know, I'll borrow Anuj's phrase when he says doodh ka doodh, pani ka pani, primarily because it's a tale of two cities. While Parag reported a good set of numbers, Quality said that their results will be delayed because of a technical ERP snag that the company has, and they're trying to fix that. But just to put numbers into perspective, Quality stock is down 86% from the start of this year. Promoter's stake has fallen by 10%, and at the same time, company announced a buyback, cancelled that buyback too, and the promoter's stake is pledged to the tune of 94%. So not particularly something that leaves a good taste in your mouth.
Okay, a lot of people don't think milk leaves a good taste in your mouth, especially children like you. All right, Sonal, other stocks on your radar?
I'll start with Max Financial. Good set of numbers coming in from the company. The value of new business margin, that expanded by 130 basis points on a YOY basis and 330 basis points sequentially. Avanti Feeds, on the other hand, reported weak set of numbers, and the major decline came in from the shrimp feed business that accounts for around 88% of the revenues. The EBIT margins there literally halved on a YOY basis and were flattish sequentially, and all this led to profits declining by around 40%. Expect some red on that stock. Unichem will also be in focus because company's API manufacturing facility at Roha was inspected by US FDA, and they have come up with 4 observations from for the company. However, company says this will not impact their regular business, and this particular unit manufactures API formulations that are exported to the US. Some red on that stock is expected today. Back to you.
Okay, guys, thanks a lot for putting all of those stocks in front of us. Let's do one thing. Let's give you a quick recap of all the stocks to watch today. Positive news flow on names like LIC Housing, United Breweries, Hindalco, Sun Pharma, Parag Milk, Adani Ports, Adani Power and Max Financial. While stocks that have negative news flow going, NBFCs like M&M Financial, DHFL, Repco Home Finance, Canfin Homes, PNB Housing, as well as stocks like Syndicate Bank, Ujjivan, Quality, Avanti Feeds and Unichem Laboratories.
I just want to add that Syndicate Bank is not that much of a howler. The gross NPLs have risen by 500 crore, but it looks bigger as a percentage because the book has shrunk. Okay. Yes, all told it's going to be in the red, but it may also be signaling that the pain is ending. Provision cover is very good. That's why huge losses. They've provided for almost 67-70% of their bad loans.
And yesterday in a good market for PSU banks, it was down, so perhaps...
Okay, so maybe there's some space.
Yeah, exactly.
Okay, but the stars really yesterday were Axis Bank and ICICI Bank. They contributed to that big Nifty breakout that we've seen lately. On the other side of the break, our technical gurus will tell us whether there's more to